you wanted the best, you've got the best podcast, the hottest podcast in the world. The Chris Voss Show, the preeminent podcast with guests so smart you may experience serious brain bleed. The CEOs, authors, thought leaders, visionaries, and motivators. Get ready. Strap yourself in. Keep your hands, arms, and legs inside the vehicle at all times, because you're about to go on a monster education roller coaster with your brain. Now, here's your host, Chris Voss.
I'm Chris Voss here for... Hi, folks. Chris Voss here from thechrisvossshow.com. Welcome to the big show. As always, my family and friends, the Chris Voss Show is a family that brings you the most smartest minds, the most brilliant stories, entrepreneurial journeys, and all the different things you can learn from in life to make your life better. But we need you to do the one thingy there that we ask everyone to do. Refer to your family, friends, and relatives. Put your arm around them and say, you know what? You need to be smarter. Go listen to the Chris Voss Show. Subscribe now. Go to goodreads.com/Chris Voss, LinkedIn.com/Chris Voss, Chris Voss One, the TikTok, and all those crazy places on the internet. Opinions expressed by guests on the podcast are solely their own and do not necessarily reflect the opinions of the host or the Chris Voss Show. Some guests of the show may be advertising on the podcast, but it is not an endorsement or review of any kind. Today, we're going to be talking with Sean McCall. He's the Executive Vice President at Assurance Business Concepts, and we're going to get into it with him. He offers a unique perspective on corporate credit and alternative financing because, unlike typical financial experts, he's personally managed these complexities as a business owner. He provides a hands-on experience that allows him to share relatable challenges, practical solutions, and valuable lessons learned that directly resonate with fellow entrepreneurs and business professionals in your audience. That would be my audience, I guess, the way they wrote this. That they can provide real-world anecdotes and actionable insights into securing funding, managing credit, exploring diverse financing options, and making for engaged content. Welcome to the show. How are you, Michael?
I am doing fine, sir. How are you?
I am doing excellent. And give us your .coms. Where can people find you on the interwebs to get to know you?
A couple of places: assurancebusinessconcepts.com and McCallbusinesscapital.com. And then, I give my phone number? Someone can text me.
Yeah,
if they
sure.
want to. Yeah, I don't mind. That's 404-431-1263. And send me a text. Always have it with me. I'll answer or call you right back.
And then, do you want me to call you Michael during the show? I know your full name is Michael Sean McCall, or do you want me to call you Sean?
Just Sean's fine. Just Sean.
Okay, sounds good, Sean. All right, so give us a 30,000 overview. What do you guys do there at the company?
We help small business operators separate their personal finances from their business finances. And what it looks like is, a small business operator, say it's a plumber, they get really good at their job. They bust out and start their own business, but they need, supplies, all the things you need. Well, they start guaranteeing things with their social security number. They've got their EIN. And as you go down the road, next thing you know, you've got commingled funds. You have business expenses tied to your personal tied to your business. And you want to keep those wallets separate for a whole bunch of reasons.
Pierce the veil, right? The corporate veil.
Yeah, that's right. Yeah. And, Chris, a lot of really smart people out there just miss that, and I didn't know. And so that's what we do. And then we paired them up with funding if they need it on the front end, because it seems like everyone we meet with, they need capital almost immediately for something. So we have that ability. And then once we get that handled, if they need it, then we formulate the plan to get them, with a solid credit rating so they can get most, if not all, of their business funding done through the business and not through them.
Is it usually people that have that are your clients that struggle to, maybe they don't have quite perfect credit, or banks aren't in their up their alley? Sometimes,
most small business, medium business owners have around a 720 personal FICO score. That's just a national average. But it doesn't matter, Chris, how good your credit is. They're only going to give you so much. You could have a 800 credit score, but sooner or later you're going to run out. So what happens is they're not building any credit on the business, and they get to a point where they can't borrow personally, and then they're up against it. And With business credit, we can talk about specifics later. I don't want to bore anyone, but only 7% of vendors and lenders out there report to the credit reporting bureaus for business.
Oh, really?
Yeah. So, with your personal credit, when you turn 18, you start building a credit rating whether you like it or not. I mean, it's on autopilot. Mm-hmm. Business credit has to be done intentionally. Oh. And so we are aware of the other 93% that do report, and we're looking to take them from, this is a silly example, but a Home Depot personal or an Office Max personal card. They should have an Office Max business card. So they're starting to build a little bit of business credit. And there's a lot more to it than that. That's just an example.
Yeah. I mean, we used to have all the Office Max cards and all the crazy stuff with my old companies. I think they all had like $25,000 lines. It's crazy. Yeah. But yeah, building business credit is smart, like you talk about. And yeah, if you commingle funds and you have, I don't know about S Corps and the other corps, but I believe it does pierce the veil. But one of the reasons you have like a C Corp, which we always had with our companies, was it gives you that personal asset protection where if you get sued, they can't touch your personal assets. So you're not going to home or anything and be on the streets. But if you've commingled your funds of your personal and your whatever, and the attorneys can, map that out and find that, you were, I don't know. Yeah, there's people that slush fund the account to have fun and shouldn't do that. But, if you're just paying personal expenses or whatever, once you pierce that veil and they can identify that, then you've crossed the line and you've removed your protection, as it were.
Yes, sir, you have. And you know what that gets you when you figure that out? When it's too late, it gets you a whole bunch of sleepless nights.
Oh, yeah.
You're lying to be, I can remember being years ago down in Seaside, Florida on vacation. And my kids and my wife and everyone else were out on the beach enjoying life. And I'm lying there in the sand looking at my POS system on my phone to make sure that we had a good Friday night and Saturday night because payroll is coming out the next Thursday. And, due to one thing or another, I was worried about being short because it was a summer.
Yeah.
Sitting there going, well, crap, I'm down here. I'm going to have to take money out of my personal account and transfer it over, which is not the end of the world, but it's not exactly what you want to do when you're on vacation, slide over $20,000 out of your personal account, but you don't know that when you start.
Yeah. Right? No one tells you that. I mean, unless you really get a good advisor at the start, no one tells you that.
Well, that's the problem. Me and my wife bought this tavern from a friend back when we did. And I come from the media business. I was at ESPN, I was at E! Entertainment and Fox Sports, and then went into the .com bubble that definitely burst on me. And then, my wife's a C-level executive, and I was still doing the sports stuff and doing, charity events. We bought this restaurant because it was on autopilot. That's what we were told. We had a GM, a kitchen manager. John, this thing's doing $1.2 million a year. It's an easy $100,000 in your pocket. You and Robin don't have to do anything. Just show up, collect the checks. Yeah, right. I mean, that's not the stupidest thing I've ever done is buy a restaurant. I could tell you a lot about writing press releases, but I didn't know the first thing about a restaurant. And so what happens is you get in there, and it's like with all business owners, you're worried about what's happening tomorrow most of the time, what bill you have to pay tomorrow, but you're not thinking about the future and the simple things. And so what we try to do is just set up that business credit line so that when they need it, they have it. And they're not jumping through hoops. For me personally, we borrowed $400,000 to get into to buy the restaurant was $5,000. We borrowed $4,000 from the SBA, and they had everything tied up, Chris. I mean, I'm talking all the equity in our home, 401ks. It was way more money in there than we needed to satisfy the loan, but it didn't matter. It was all had a lien. So along came 2018, and the interest rates went down to almost nothing. Yeah. And we were like, hey, let's refinance our house. Well, the SBA said, that's cool. You can refinance your house as soon as you pay us off. And I said, well, can we pay at the closing table like everyone else? And the answer was no. You got to pay now.
Holy crap! I'm not
walking around with a guy like you probably folding money, but I don't have $375,000 lying around to.
Yeah, that's crazy, man.
So we had no lever to pull because every bit of capital, personally was there was some, but not enough. is what we ended, to really we couldn't get any capital out of the restaurant. So we were just stuck. Later on, we were able to get a lower interest rate, but it was no help from the SBA, and they do not care.
Wow.
I mean, they're great. They give you loans, but you're a slave to them. So we were there,
That's crazy.
Yeah. And later on, I won't bore you with all, we ended up having a lawsuit with the people we bought it from.
Oh, I'm sure.
The rebrand, that was, $175,000.
Damn.
We got that done. And, we were able to do that one. And then all of a sudden, this is before COVID, in 1 week, our payroll, payroll was due, the rent was due, which is close to $20,000. And then the county comes by to do their inspection, and they tell me I need a new grease trap, and I need it next month. And it's an outdoor grease trap, which is in the ground and $30,000 or $40,000 to build.
Oh, geez.
Yeah, so, well, I don't know. I don't. Publix owns a strip center. Shouldn't they put it in? I can't take it with me. No, you have to do it.
Oh, wow.
So there we are. And you try to plan, but you don't know about that. So that week, you have to come up with $100,000, and that kind of messes with your operating capital, especially in the middle of the summer. Mm-hmm. So we were able to get an alternative equipment funding loan and make that happen through a great company that we met. And that's when I started learning about all this stuff, because we're blessed that, we would have been able to probably just shoulder it one way or another, but we wouldn't have liked it.
Yeah.
But man, after COVID, people didn't come back, and we were sitting there with all that extra debt on us personally.
Oh,
You're talking about $300,000, $350,000, $400,000 in debt after all that, not including plus the SBA loan. Mm-hmm. And thank goodness for the government. We got a grant because my wife was 51% owner, and we got PPP money.
Nice.
Yeah, so we ended up getting out of a lot of it. We were still servicing one debt, but man, if it weren't for that, we would carry a lot of debt to our personal. And to your point earlier, a lot of people aren't prepared, and people do lose their homes, and they do lose college funds, and that all stinks.
Yeah, it really does. You've given me more thought too that, I need to take a look at what we're doing in building our corporate credit. But this is something people don't do. And I remember, I think that's where we started building ours. We started getting Office Max cards and Staples and all those things back in the day. And then we just built them and kept paying them off and doing stuff with them. But, having that credit profile, but there used to be a thing back in the day where there was like a credit, I can't remember what they used to call it, but there was like a credit profile of some type on you.
Paydex score.
A Paydex score.
Paydex. Okay. It's kind of like your FICO score. It's, Equifax business, all the business bureaus, which are separate. And, it's changing very rapidly. A couple of years ago, it was just the Paydex score. And if you think of a personal credit, the ranges there. Business credit goes 0 to 100. And you need to be over 70 to start getting, some decent favorable terms, talking about better rates, better vendor relationships, and all that stuff. But now they've made it much more algorithm driven. So you've got lender compliance. We have a scan that any business owner can run. It's free. And that scan takes a look at 150 data points to find out where your business is. And all we need is the EIN of your company. It's going to tell you where you are compliance wise. It's going to look at your credit history. It's going to look at your scores, and it's going to look at your bank rating. And there's another rating called the SBSS, which is a private language between the banks. And so you have a score. You need to have over a 160 with the business bank rating. Good luck figuring out what it is, but you have to have a low 5. So when you look at, we did 1,000 scans, and 10% of them came back fully compliant. Mm-hmm. And, we're not rocket scientists. This is proprietary software that's been around for 15 years, and it identifies everything. It'll give you what kind of loans you can get right now, everything from a line of credit to MCAs to you name it. And then if they need that, we'll walk them through that. But then they're paired with a personal credit, analyst who walks with them, does a deep dive, because every case is different, right? You're in a different spot than me, and so on and so forth. So that's how it works.
So the potential clients that are out there, entrepreneurs that are out there, do they I mean, is the time, should they be waiting until they really need money and a loan to talk to you, or should they be talking to you ahead of time to try and, start building what you guys call being bankable? Tell us what that means.
It's a SAT word for being able to be approved for a loan.
Nah. That's the same term women use for me on Tinder. They're like, "Are you bankable?" And I'm like, "What does that mean?"
I failed both of those. So it's the ability to go to your bank, your local bank, and get a traditional line of credit, right? And if you can do that, this is how I hope you could tell that I'm honest. If you can get if you can get that kind of loan, please go get it. Run, go straight to it and get it, because there's a couple old sayings. Fast money's not cheap. Cheap money's not fast.
That's usually what I hear on Tinder too.
Yeah.
I don't know what that means,
but it's speaking of dating, business credit and business loans are just like dating or anything else. You can't be too available. If you have a high business score, the best time to get a loan is when you don't need it, because everybody wants you.
It's true. It's true. I remember the famous story, if you don't mind me interjecting this to make your point, but there's the famous story of how Ford, I don't know why, if they saw something coming, but they took out like $1 billion or $2 billion loan as a slush fund just for shits and giggles right before COVID hit. And hold on. This is in 2008 when the market crashed, and they'd taken out a loan to have a slush fund. I don't know if they saw the shit coming down the pike or why they did it, but they did it. And I don't think they had the foresight. They were just kind of like, it'd be kind of nice to have a slush fund of like $1 or $2 billion. Mm-hmm. And that was the thing that really helped them survive the 2008 crash, where GM and Dodge or Chrysler had to go to the government for bailout. Ford was able to weather it because they just had a rainy day fund. Yep, that's right. That is, you could pretty much be the CEO of our firm, because you're saying the exact correct stuff. And with those types of things, especially with alternative funding, we had a client the other day that they were worried about upcoming tariffs. And it's their slow season. So they wanted to buy as much product as they could now before they anticipate getting tariffed on it. Yeah. So they got a loan that is you hear of AR loans, right? Accounts receivable loans. In a lot of, builders will take those out because someone might owe them money for 120 days, but they've got to do their next job. Well, there's a accounts payable loan for the same thing. Mm-hmm. So I think that was $175,000. The bank paid them the $175,000. They got the product, and then they have a small payment on that product. It's like 120 day, I believe, term, but it was just enough to get them through to get their product in, get to the busy season. Then they'll pay that off and they'll be done with it. But they have it in the bank, and same thing was happening back in November before the election. A lot of the companies were getting ready. Yeah. They thought thinking about it now or back then. Mm-hmm. But man, everything. One thing you can count on, and this, if you own a business, you're going to need money at some point. Yeah. And I remember like the day we got that business, I was so happy. And I called our CPA, and he was the guy that had been doing them. He said, "Sean, whatever you do, get a new marketing person, change the menu, do whatever you think. But trust me, brother, don't mess with your finances." Yeah. It's like, you don't have to hire me. You don't have to keep me, but please, for the love of God, hire somebody. Yeah. And we kept him, and he's an awesome CPA, but he didn't know anything about business credit. He didn't tell us about it. Mm-hmm. When COVID came, we had to figure out PPP all on our own. Oh, wow. So we ended up losing our restaurant. We walked away after COVID. Yeah. And it was just, we had insurmountable debt. Now, my colleague he bought one of the other locations. He went the other way. He prepared. Pete is opening up his second restaurant tomorrow. Oh, wow. Yeah. And he's doing really, really well. Uh-huh. So, that's a great example of how he can use it. Opportunity doesn't wait for anybody. He had to be able to get a new restaurant that was going out of business around here. Yeah. And he bought it. Sadly, I have a kind of a friend. I met him through one of those networking groups. Young guy has a
a pet grooming business, where they come to your home, the mobile grooming. Just up and started 2 years ago. I tried to get him and his partner to start this program. They didn't do it. And this past Thanksgiving, their van was hit by a driver that was uninsured, and their insurance just paid off their one van. They didn't have enough money to get another one. Their credit's shot. Oh, no. I've been trying to get him a loan for 6 months. I just found out today the last hope I had was a denial. And there's, even with the alternative lending, you need to have at least $30,000 a month in revenue, and you have to have assets, and his assets were gone. So I feel terrible about it, and things can go wrong, but always prepare.
Yeah.
In advance.
Always prepare. And that's a really good, smart thing. Like we've had business brokers on the show that have talked about, I remember a few years ago, I always built companies for empires. So I built them. I hope that they'll last forever, but I've kind of learned over a lifetime that things don't always last forever. And there's ebbs and tides and flows of technology and stuff. And sometimes, interest rates and the 2008 the collapse crisis was pretty interesting. And, I was wondering if we're going to go through one with this tariff business. I mean, I know there's probably a lot of people that are in trouble right now that were importers from China. And, they've been kind of caught in a lurch now for almost 5 months, maybe, of this, are there tariffs or they're not, flipping around. And like you say, a lot of people are smart and they loaded up on inventory in anticipation of some of this chaos. So describe for me what you guys do. I'm looking at your website, and you guys have a process that you do when people work for you to become bankable. So for those out there, kind of give us at least a kind of a rundown overview of how you guys make me bankable, or, a client prospectively out there in the field.
Absolutely. So the first thing we do is we run that business scan on you, and that gives us, again, it looks at like 150 data points and really gives you a pretty crystal clear roadmap of things that need to get done. And none of it is, incredibly complicated. It's just has to be done in a certain order. Yeah. And with certain vendors. And we're fortunate that we have, we know that we have that knowledge, and we have the relationships with the lenders to be able to tell someone like you that, we're not going to ask you to apply for something we know you're not going to get approved for, because we know all the underwriting guidelines, and it's a process. Nothing is too good to be true. It is, right? I mean, it takes 6 months to do.
Yeah. So 6 months process on average then.
I saw an ad yesterday on LinkedIn, or somebody posted that they're selling shell corporations, aged shell corporations. Wow. So you can buy a 10-year-old company, and the pitch was, hey, you'll get it. You'll inherit their trade lines and some creative language, and you can go apply for a loan with all that history. You can, if you like jail. I mean, you can't. You can sell the companies you can sell those age corporations all day, but you can't go into a bank and claim their payment histories.
Yeah, that would be kind of weird, wouldn't? Because the revenue balance sheets wouldn't match, really. I don't know how. I don't want to be involved. I mean, there's a lot of shadiness out there, So. Yeah, but like I started mentioning earlier, I think I segued off of it. But we had some folks on that. I always thought in building of empires, and we had some folks on that were like, no, you should be building your business and be preparing it from the get-go for a potential exit sale. And I'm like, God, I never thought of exiting a company and building an exit. I mean, I always thought it was a cool idea, but I'm like, God, if I'm putting this much work in, I want to keep it forever.
Oh, it happens. It happens. I had a one the other day from actually a personal friend. He's had a printing company here for 30 years, commercial printing. He does really, really well. During COVID, he had to shut down, and he was maintaining $100,000 a month of buying paper on his personal credit card. Wow. So, this gentleman is, I think, 63. He's got 2 more years, and he wants to transition that business to his brother. And so business credit will transfer to family or to a key.
Oh, really?
Yeah. So he got in the program to build because he has the relationship with the vendors. His brother doesn't. So by the time John takes over from Pat, he'll be in a good position to continue running the firm that his brother built. So
you guys get me ready for lending, working capital that might need, and you're right. And I've been in those processes where it's like all of a sudden you're like, yeah, we need a giant copier. We need a new machine. You're like, what happened to the old machine? We paid like $40,000 for that fucking thing. It doesn't work anymore.
Yeah.
And Bob broke it. He wasn't paying attention to training. Oh, that's great. Thanks, Bob.
Bob. I mean, what about my GM at the restaurant? He called me one day and said, our ice machine's out. And I said, yeah, I know. Yeah. I've been talking to people about getting new as well. It busted. So what did you do? Because I paid to get it fixed.
No, it's out.
How much did you pay to get it fixed? $2,000. And I was like, CJ, I was about to buy one for $1,500. Do you think you might have want to run that by me before? Before you did? So, they just don't think $2,000 here, $100 there, blah, blah, blah. And they always think the owner's like driving a Brinks truck up to his home to dump off the cash.
Oh, yeah. Yeah. We had one of my executive secretaries one time. We had her in charge of purchasing. And one day there was like a sale at Office Max. And like I said, we used to have these really crazy credit card lines with the companies I used to own. And so she bought like 2 years worth of office supplies.
Heck yeah.
One day, like 2 years, and you try and keep a just-in-time inventory, JIT, we like to call it. Yeah. And you're like, you bought 2 years worth of shit on our credit cards and we're going to pay interest on that now?
Enough. Yeah. You're toast.
Yeah. Her job didn't last long.
Hey, they have loans out there, these NCAs, which call you and say, hey, Chris, I see you do well here. I can give you $50,000 tomorrow just based on your sales. Put it right in your bank, and then we'll start withdrawing it once a week. And then you wake up one day 6 years later, and you've paid 80% interest. Yeah. And they have business card stacking where you can go out and you can get a business card that doesn't report to your personal credit until the day you're late, and then the day you're late it reports. And 95% of the people, if business credit.
Within one day.
Business credit's got to be paid on time.
Really? It doesn't
no grace period. And when you pay it late, then it affects your personal credit.
Oh, so, really?
You just don't want that.
I got like a flood of those. Like every day I have those coming in the mail. Yeah. It's freaking insane. And it's like the same companies too. Like, and then I get these weird calls too. And you're like, after a while, you're like, is it not obvious that I'm not going to take your offer? You've sent 100 pieces of mail. I just don't get it, but whatever.
Well, that's just it. You get all that stuff, but when your business is circling the drain, you don't have any time you're going to take what you can get.
Yeah.
That stinks. I mean, get it when the getting's good and just be prepared. I wish that day I was on vacation, I had a line of credit at my bank. I would have just rolled over and just transferred it in, and that would have been that. And again, we survived, but it was a bunch of blessings and luck.
And so, the message, be prepared now, get involved now, start looking at your credit. Make sure you don't pierce that veil. I mean, one of the things we always did C Corps because I had partners and stuff, and I like the protection of it. It's a bit more much, but I got to tell you, when you get sued, you sleep so much better at night. And when you become successful, you just pick up shakedown lawsuits. I mean, it's just, people are like, you have money? All right, let's sue this guy. And it's just insane, some of the different things that you go through. And having that C Corp protection, or, even there's some protection with S Corps and limited liability partnerships and stuff, but you have to make sure you don't pierce that veil and commingle your funds. I mean, that's
Absolutely.
Just that will make you lose sleep at night, especially if you're in a lawsuit, because you're
it will. I mean, I had the added pleasure of thinking that my wife was going to murder me if the restaurant did poorly. I mean, she
just divorced you. That's more painful.
I've read some of your material. I still can't win an argument with her. There's splitting the difference. That she's on that side, but you just get in a jam and you just never know what's coming. I mentioned earlier that the cash flow problems don't announce themselves, and 82% of businesses fail because of cash flow. And
82%, wow.
Yeah, and not necessarily because they don't have the money, it's because it's just in the wrong spot at the wrong time.
I mean, we used to loan money to businesses and buy them out, just small businesses. I'm not that rich. But one thing that we always find is they'd be like asset rich, but cash poor.
Yeah.
And so, it'd be some guy who had like, $400,000 or $200,000 or something. And he went and bought a business, but he went and got like grade A office, spend, it's, and then, so I'd be like, you're at the highest, do you know you're at the one building in town that has the highest square footage of cost? Like, you just went right for that. And then, usually they have like, high-end computers and high-end furniture and high-end everything. And, like they're a barbecue place, and they not only started the barbecue thing, but then they bought some expensive barbecue truck, and so, and a lot of that's out there, man. I mean, and so a lot of business brokers, and then I learned that from them in offering loans was, you have these people that they're cash poor, but they're asset rich. And so, you can give them some walking money, but you can be like, I'm going to save you from bankruptcy. But yeah, this is your dream, but it's dead. You killed it. And it's a hard thing to do, but you can't keep them around because they just sink the company. They're the problem, actually. Yeah. I've heard that many times at my company, but somehow I'm still here. My employees are like, you are the problem. And I'm like, you're right. And, but I'm also the boss. So yeah, being prepared for these things, be prepared, use your Boy Scout thing, I think is the important lesson here, because like I said, being prepared to exit your company, being prepared to build its credit, and like you say, that credit, if you build it, it will go to the next buyer, correct? If there's a buyer for a company.
Situationally.
Okay, situationally.
The key man, family member, and there's ways to structure that too. You could start a couple years earlier. You could start a couple years earlier.
Yeah.
With a with one of your key employees or something, but not at the last minute. It's not one of those.
So as we round out, give us a final pitch out. How can people reach out to you? How can they get to know more? I think we've established that, trying to plan ahead for this and get data and information is probably really important. The worst thing you can be is have that gun to your head and you're willing to take anything just to stay afloat or make payroll. And, you take some crazy, stupid high interest loan.
Yeah, I can make it easy. We're getting short for what we spoke about earlier, but it's very, very simple. It's, the easiest time to get a loan is when you don't need it, and I understand. I really understand, because I bought a restaurant coming from sports and media. I knew nothing. So I was more worried about trying to figure out how the ordering worked and things like that than thinking about business. I mean, I had a brand new loan, money. I thought all that was locked up, but it wasn't until it was too late. So I would say don't wait. And always remember that the best time to get one is when you don't need it. And there's what an old Asian ancient proverb that says, best time to plant a tree was 100 years ago, but if you didn't do it then, do it today, kind of thing.
Exactly. Yeah.
That's it. To reach, the best thing to do, I would encourage everybody, take 5 minutes, send me a text at 404-431-1263. I'll get back to you. I will run that scan for you. There's a no obligation. That'll actually get you in the system, and you can see where you need to shore up, and you can do part of it on your own. Before you hit a paywall. Mm-hmm. And I can also pull your business credit report to let you know where you are. And none of that. That's all. Complimentary. And I see it all the time. Somebody will tell me, "Oh, I'm good. Then I'll pull their credit report, and they're at 25 with a $1,500 limit, and but they're doing $2 million a year. So but they've been around for 15 years, but they've not been building any credit.
Yeah,
so that's it. Just reach out, take the time, make it. No one has time. You got to make it.
Well, thank you, Sean, for coming on the show. We really appreciate it. Thank you very much.
Yes, sir. It's been fantastic. Thank you for the time.
Thank you. And thanks, Sean, for tuning in. Go to goodreads.com/Chris Voss, LinkedIn.com/Chris Voss, Facebook.com/Chris Voss, Chris Voss1 on the TikTokity. Be good to each other. Stay safe, folks. We'll see you guys next time. And that should have us out.